Hello traders, Gary Wagner here just before 8 o'clock in Honolulu, 2 o'clock in New York. It is Wednesday, the 29th day of April, 2015, and this is the daily report for gold and silver. With about 15 minutes before comments come out from the most current FOMC meeting, we are looking at gold trading lower this morning. Could not sustain the two-day gain that we saw, currently at 1209.80. We have seen a low of 1203.90 and a high of 1213.50. Spot or cash gold currently trading about 1210, 1209. Silver 1666. Puts it up roughly 9 cents on the day. We've seen a low of 38.50 and a high of 68.50. So traders, as we go into today's report, we are minutes after comments coming out from the Federal Reserve FOMC meeting. You can see gold selling off harshly, currently now down about $10, 1203, 1204 in that area. We will follow this closely as we can see gold under pressure. But what I do want to do over the next few days is, with our new format, not only get you, our subscriber, familiar with the charts and studies that we're looking at, but I want to go through pretty much market by market, looking at the studies that we've done so I can give you my short-term, interim, and long-term view of the markets that we follow. And that, of course, is gold, silver, the dollar. We'll also be looking at the NASDAQ, the S&P Dow Jones Industrial, as well as crude light. And time permitting throughout the week, we'll also touch upon the currencies. We are just a couple of ticks away from breaking below 1200, currently trading at 1201. It's a fast market, trader, so 1201 and change. So traders, we typically can get the kind of a knee-jerk reaction that we're currently seeing. We're looking at a very, very short-term candlestick chart. This candlestick chart, each candle represents roughly a half an hour in trading. We can see that the low that it hit was approximately 1200 even and 70 cents, currently popping off those lows at about 1203. So traders, as you can see, we are popping back off the lows at 1205, roughly 10 minutes since the Fed comments came out. They saw the economy slowing during the winter. They cited reasons as for the slowdown as bad weather, and they continue to monitor inflation developments closely. So when we look at the knee-jerk reaction, we're now back up around 1207. Let's take a look at our dollar index and see what we've got going on there. The dollar continues to slip and continues to fall, currently trading off 1.28 points at 94.81. Now traders, we had the Dow, the S&P, NASDAQ all down. At this point though, you can see we've got our Dow Jones Industrial Average trading off roughly 57 points, 57.54. It is a fast market, and it is off of the lows of the day, with the Standard & Poor's, this being the E-mini, just above 2100 at 2102. Traders, now that the dust is beginning to settle down, gold currently trading at about 1203, still under pressure. I do want to spend some time and go through my short-term view of gold and our current wave count as it pertains to that. When we look at this chart, what we're looking at, it's a daily chart. This move here from about 1340 down to the lows right in here at 1130. We do have a 5 count. And so what we're really looking at is 1, 2, 3, 4, 5. Then we go into our ABC correction. This, of course, is a bear count, so our correction is up. Our A, our B, and then our C, which takes us back down to a 5 count on the way down. The way that we've got it numbered is 1, 2, a long third wave, and it's my belief that we are currently in this fourth wave. This, of course, is an intermediate count, and so I've put up a couple of projections of what I believe we could see in terms of the upside. In essence, what I am looking for is for the market to, this is wave 3, to complete wave 4 at some point, and we'll take a look at the areas. This is our 50% retracement, and I believe that we could see it move anywhere between 50 and call it 75. So right in this area, we'll have what we tend to call our sweet spot. In other words, where we think these highs could terminate before returning back to that final fifth wave down, and then we'll ascertain where we think that could go. Now, based upon that, as you can see, all I've done is created a quick study looking at the size of this wave 3 and a 50% retracement. You can see this is where our tops came in at. So that could be the entire retracement that we're looking at, meaning upside move. It could move a little bit higher, as high as about 1241. But as I've said before, I really can't even begin to get bullish unless we see this market break above these tops, and currently it has not done that. Now, following the conclusion of this fourth wave, my sense is that we'll see a final move down and complete the fifth wave. Once again, this is a intermediate or short-term count. So traders, there's no doubt we are in absolutely a fast market, bouncing off the lows at about 1200, currently trading 1205. This is the spot market. So traders, we are looking at the euro dollar as it currently trades. It is currently at 111, up roughly 130 points right in here, or 1+%, 1.2% higher. When we look at this particular chart, this is our daily chart. Our current wave count with the euro dollar has obviously seen it in a decline, so it is a bear count. 1, 2, wave 3 takes us down to these recent lows at about 105. We can see this double bottom here. And according to our current Elliott wave count, we are now in a fourth wave correction. That fourth wave correction could take us anywhere between the current area that we're at up to about 120 being the absolute high that we would have. Again, this is a corrective wave, so in essence what we would see is one move up and then a final move down. Absolutely no doubt we've got an exciting day here. Stock market, equities markets really starting to come off of these lows that came in this morning, off 100 plus points at one point, off 10 to 11 points in the E-mini or the S&P 500, now down about 7, 2104.75 current print. Now, in terms of my current target for the Standard & Poor's and our current Elliott wave count in regards to the S&P 500, we're obviously hit this top, and our current resistance is the record highs, roughly at about 2120. But in terms of a wave count, the way that we're looking at it is that we are currently in our fifth wave, intermediate count once again, and our upside target for this fifth wave is about 2165. I feel that it has the ability not only to take out these most recent historical and record highs, but exceed them by about 50 points, currently trading at around 2100. I believe we could see it go as high as about 2155. So traders, we're looking at our crude oil page. Crude oil currently trading up about $1.50 or 2.5% higher on the day, 58.50. I draw your attention to our weekly chart on crude. Let's go ahead and pull that up, enlarge it a little bit. And traders, this of course is our major count. These are our majors here, so it's a much more long-term study. But when we look at the current activity of crude, we find that we're currently in a corrective fourth wave right in here. Our wave count in essence would go as follow: wave 1, wave 2, this long wave 3, and we're currently in wave 4. Now, based upon that, I have added one basic fib retracement from the beginning of our third wave to the conclusion of our third wave, and typically a corrective wave can go anywhere between 50 and 75% of that move that we saw in wave 3. However, 3 was such an elongated wave, I'm not even looking at these upper areas. And in essence, I would look, if the market does continue to climb higher, the area that I would look for it to climb at a maximum level, I still can't conceive oil going back even to 68. And so that would be our first area, this being our 23% retracement, and we are trading slightly above that. So we'll have to take a look to see how this market kind of unfolds. But as I said, we have seen a bounce off of these bottoms at $41. And so what we want to look for, in essence, long term, is wave 4 to take this market a little bit higher, whether it tracks up to 67 or higher, but that will be followed by, in other words, when we conclude wave 4, we will go into a final fifth wave, and according to Elliott wave theory, that fifth wave is going to take us to a new low below the lows that we hit recently at 41. As I said, we'll have to see how that unfolds. So traders, silver still trading under pressure on the day. Although in terms of its low at 38, it is come off of the lows, high 68. So we're trading about mid-range on the day. I do want to spend some time tomorrow, on tomorrow's show, covering our current Elliott wave count, long and short analysis. And as I said, this is only day 2 in which we're integrating the new platform. Please, I invite your comments. Just send them to me directly, Gary@thegoldforecast.com. Let me know what you think. Also, anything that you'd like to see, I am open to making this the most comprehensive and best service available. And I need you, our subscribers, to help me reach that goal. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update review. Bye-bye.